Hi everyone, welcome to another edition of the Real Estate Minute. I'm Tom Blefko. Well, my friends in the media are at it again, and this time they're talking about home equity. And if you've been following along, you may have heard there's a growing number of homeowners with negative equity. Your clients are reading and hearing these claims, and they are paralyzed about making a buying decision. It's our job as a real estate professional to cut through all the noise and calm the waters. In truth, the headlines don't give us all the information we really need to understand what's happening and at what scale. So let's break down one of the big equity stories you and your clients may be seeing in the news right now and what's actually taking place. That way you'll have the context you need as a real estate agent to understand the big picture and educate your buyer clients. Now, one piece of news circulating focuses on the percentage of homes purchased in 2022 that are currently underwater. Now, the term underwater refers to a scenario where the homeowner owes more on the loan than the house is actually worth. This was a huge issue when the housing market crashed in 2008, but it's much less significant today. Now, media coverage right now is based loosely on a report from Black Knight. The actual report from that source says this: of all homes purchased with a mortgage in 2022, 8% are now at least marginally underwater, and nearly 40% have less than a 10% equity stake in their home. So let's unpack that for a moment and provide the bigger picture. The data band report from Black Knight is talking specifically about homes purchased in 2022, but media headlines don't always mention that time frame or provide the surrounding context about how unusual 2022 was for the housing market. In 2022, home price appreciation soared and reached its max around March or April. Since then, the rate of appreciation has been slowing down, and homeowners who bought their home last year right at the peak, or those who paid more than market value in the months that followed, are more likely to fall into the category of being marginally underwater. Now, the qualifier marginally is another piece of the puzzle that the media isn't necessarily including in their coverage. So what does that mean for those who purchased a home in 2022? It's important for us to convey to our clients that owning a home is a long-term investment, not a short-term play. When headlines focus on short-term views, they're not necessarily providing the full context. Typically speaking, the longer a homeowner stays in their home, the more equity they gain as they pay down their loan and as home prices appreciate. Now, with recent market conditions, homeowners may not have gained significant equity right away if they own the home for just a few months. But it's also true that probably 95% of these homeowners who recently bought their house are unlikely to be looking to sell right now. So what's the bottom line? As with everything else, knowing the context is important. Today's headlines focus on short-term equity numbers and fail to convey the long-term view. You need to share that long-term view with your clients. Until next time, all the best.